You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program I like to call around these parts. The option block, a little bit of options analysis, some education, a lot of unusual activity, some strategy, a bunch of your questions, some peering into the future. Stir it all together. You have the delicious, sometimes explosive cocktail that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating Options Insider Radio Network. Quite a few shows for you guys to check out. So if you like this one, then you might like our Options Bootcamp program as well, where we break down a lot more education from an options perspective. Also, the Options Playbook Radio program, our very weekly breakdown of all things. Take a strategy and do a deep dive into it, how it performs. Earnings season, the popular time for that show, because they're always breaking down earnings straddles and earnings plays over there on that program, hence the name. Options Playbooks, check out that one as well. Of course, if you're into the commodity side of the space, then TWIFO, This Week in Futures Options, may indeed interest you. We break down crude and gold. This week, copper moving a lot of the metals moving off of Trump's claims on infrastructure. A lot of things going on out there in the metals and oil side of the fence, and we'll break it down, ags as well. On TWIFO, and if you're into this show, you like VIX, you probably do, then Volatility Views may interest you. That's every Friday, noon Central. We go live. Then, of course, after the fact, Monday morning, you can get all that when it all hits the network, as it usually does. You can subscribe to those shows individually. Probably the easiest place to get all of our stuff, though, is via our network feed. So subscribe to Options Insider Radio Network wherever you find your favorite podcast programs, and you get it all. I mean, all of it. Our interviews, our breaking news from the options market, our daily news show, all that stuff. Advisor's Option. We'll hit you hard with a lot of good options content. But that's what you're signing up for. You want to fill a nice commute, or maybe your work day, or working out, whatever it is you do with some good options content, we got you covered. Of course, you can always grab our mobile app, or indeed just hit us up. And however you also, of course, I always forget to plug it, every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. You can join us live right here via Mixlr, M-I-X-L-R, as we break down all the cool stuff in the world of options, see how the sausage is made, a little bit of a glimpse behind the scenes. And, of course, if you want to ask questions, live is the best place to do that as well, because you get moved to the front of the line, which we tend to like. However, speaking of asking questions, however you listen to the show, after the fact, listening by iTunes. By the way, leave us a review on iTunes if you haven't done so. We like to see some of those floating through every now and then, too. And, of course, via the website, questions at theoptionsinsider.com, via social media, however you listen to us, hit us up with those questions, those comments. We really couldn't do the show without you guys, and we like to see what you're into. So if you hit us up with your questions, maybe if they're good, we'll feature them on the show. Speaking of featuring on the show, we got a couple people to join me on the old program today, my usual cast of cohorts/characters. Let's start off. Let's go in order of proximity just to cause more umbrage. Let's go out to that scenic wonderland known as St. Charles, Illinois, where we are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program in this new Trump land. I guess depending on how you view it, the Clintastrophe came to pass, or indeed the Trumpocalypse came to pass, I guess, depending on how you viewed it this week.
Well, I have a more positive viewpoint, and I had an election day straddle, and I knew I was going to win either way. And that straddle, the cost of that straddle was the property taxes that I pay because I live in St. Charles, and no president is going to stop me from doing that. And on the flip side, no president is going to stop me from enjoying life in America. Yeah, we all have our political views, but you know what? We live in America, and the good thing is that we're still American citizens. We still live in the best country in the world. Half of the country didn't get what they wanted. Half of the country did. So nonetheless, I'm a happy guy.
Uncle Mike, always a happy guy. And indeed, you're right. Half the country is happy, or at the very least, is less dissatisfied than the other half. As always tends to work out that way in this very polarized country of ours. We'll get to a lot of that as well. But first, let me introduce the other components, the other third of our trio, our triumvirate here on the old option block. The Rock Lobster himself, Mr. Andrew G. How are all things in that breakaway republic known as Maine, sir, post-election?
Right now, let's see. They raised taxes on rich people. They made pot legal, and they raised the minimum wage. So I think the state, I think the average person is still partying in Maine. Everybody's like, woohoo! It's still happening. It's happening. So I think the state's having a good time.
All right, speaking of happening, the show's happening, so let's get right to it with the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, this is the portion of the show we break down what was moving and rocking in today's and indeed earlier this week's activity. We can't really start without at least addressing the giant literal elephant in the room this time, the GOP triumphing in the elections and Trump taking a very, shall we say, unexpected victory. We were talking even on our last show on Monday about how the market was rallying because it seemed like the way had been paved for Hillary to win, given the FBI investigation was being closed. So it seemed like that was the final impediment to her marching inexorably to victory. All the polls showed her leading. All the various outlets that had any sort of prognostication, the Times, others, of course, granted they have a certain liberal bent, but still, 15% chance they gave Trump in the Times. I think the top vote gave him 2% chance. I hadn't get a chance to see how the final futures went out actually on him and his actual election, but I'm sure the probabilities were somewhere similar to that range. And lo and behold, on Tuesday evening, Wednesday morning, we learned that A, polls are meaningless. B, data is meaningless. And C, the data is not measuring the right thing clearly because no one predicted what we ended up seeing. It was such a tumultuous period that we actually did a first for our network. We did some live afternoon and evening shows, little volatility views, quick hits, because things were rocking and rolling so much in that after hours period. We saw the VIX futures just spiking to ridiculous levels. They went out right around about the 15.5 or so level in the VIX cash. We saw the futures spiking all the way up to, actually a little bit higher than that, though. I'm looking at the earlier part of the graph. And then, but during intraday, overnight, I should say, they spiked to about 23. We saw at one point in that Nova futures contract. So it was apparent that risk was on. We saw the S&P futures selling off about 100 handles. The Dow close to 1,000. It was pretty terrifying times. It also worked out to be pretty good times if you're in the volatility futures business. The SIBO setting a new record. They of course added extended hours to their volatility futures complex recently, within the last year or so, I believe, and it's usually averaged about 8 or so 9% of the volume in that period in really active times. And we saw them blowing through that with about over 250,000, 263,000 contracts going up just in that extended hours period. That compares to Brexit, the Brexit record they set earlier this year with 235,000 contracts. So clearly people were slinging some volatility in that overnight time frame. We also saw our friends over there at CME announcing a new record thanks to Trump. They said volume across all asset classes, including stocks, treasuries, and oil, totaling 44.5 million contracts. That was on Wednesday. The previous record was set back in October of 2014 when they did 39 million contracts. That was on that brief kind of treasury flurry, call it what you will, flash rally. That is still really inexplicable a couple of years later, but that was about 39 million contracts, moving about 5 million extra contracts. Thanks to Mr. Trump. Some big winners and losers coming out of this as well. We've seen big tech names taking it on the chin. post-election. Even today, Facebook down close to 3%. Google Alphabet, I always call it Google Alphabet. Amazon also off 3% or more on the day. A lot of them taking a heat given the Trump's pretty well-known anti-immigration stance and the fact that a lot of those companies are very active in the H-1B1 visa arrangement, trying to get more high-tech workers for them. So that may lean on them. Obviously, the market leaning on them as well. Also, some surprising winners of Hillary's loss. Because she, of course, was taking the very populist bent against a lot of big pharma on drug prices, things like the EpiPen, very infamously. We talked about it here on this program. The S&P Pharmaceuticals Index popping about 5% or so post-election, given the fact that it wasn't Hillary coming into office. So kind of depending on where you were looking, it worked out. And of course, as even though all that spiking of VIX going on in the after hours, we were talking actually on that first midday session about how everyone that whole day long was putting on trades to try to fade VIX to the downside. Everyone was quoting VIX puts and puts verticals and 1x2s. And it seemed like in the initial flurry, that was the wrong play because VIX was spiking. And it seemed like we weren't going to know who the winner was going into Wednesday, where a protracted period of volatility may lie in store for us. And then, of course, Trump was declared the winner. And we saw the patient people out in the volatility space doing pretty well with the VIX cash hovering right around 15, the futures hovering about 15.5 or so. So it was the play to fade it. It just had to be a little bit patient there. That said, a lot of setup here, but lot's been going on over this past week. So let's start out in the Duchy of Maine. Mr. Rock Lobster, I'm sure a lot's been on your radar over the past day or two. What's been catching your eye out here in this post-election madness of a market?
You mean, well, besides that, the Dow Jones Industrial Averages closed at a record high? How about that?
It did do that as well. Who would have thought that was happening when it was off 1,000 points overnight?
I know. A lot of guys in our chat room are kind of active watching everything happen at night. The election was a surprise. What are you going to say? I think at one point there was 400 to 1 against odds you could have gotten for Trump even 2 days before the election.
Yeah, that was one of the best bets you could have made in recent history.
I was kind of dumb. I didn't even think about that. But anyway, in hindsight, it's pretty easy to do that stuff. However, right now the financial markets, it's real weird. It's picking winners and it's picking losers. So, all of the big tech like Google, Apple, Facebook, and, had hard days today. At one point, I think the NASDAQ was down 3%. VIX only got up about maybe 1.5 points. The S&P 500 was up almost all day. Obviously, the Dow was up a lot. Commodities, banks, building materials. All of a sudden, it's like everybody like all this is going to happen tomorrow. Just money came flooding into all this stuff. So all of the industries that had a tough time under the current president, I guess you could say, they all picked up a bit. I mean, a lot of bankrupt coal companies, those things were flying. So it's definitely it's almost like the market's trying to pick winners and losers like right now. So real funky. Volatility is back to around 15.5. Traded as low as 13 this morning. I mean, they had smoked all the vol futures until somebody came in and just hit the sell button on all the Q stocks. I mean, look at them. Google, Amazon. Amazon was almost down $40, I think, at one point. Google, great earnings. Nobody cares. They sold off Microsoft. They sold everything. Everything that was technology, kaboom. So really, really, really strange. Really, really, really strange. So we'll see how it all plays out. But one thing the market's not doing really is it's not really selling off. So it's starting off with that. It's starting off with a little happiness relative to when Obama took over. I mean, he just ran into a collapsing market. Maybe I think that's probably better for a president. You'd rather walk into office when the mark's at the bottom.
Yeah, now he gets to claim 300% increase on his watch. That's a great thing.
I know. So, I think if I had a choice, I'd rather have things being in the ash can than not, because all you got is you can only go down. So or as Mr. Tosaw would say, there's never been a time in history better than to sell your stocks right now. So very interesting as far as all that goes. Other opportunities? Yeah, I think so. I think the financials at some point will slow down, but I like the financials in the Qs. I kind of been saying that all year. I think there's a little bit of a scooping opportunity here for the Qs. But other than that, that's where I think, I'm just going to stick with the power, because that's where the earnings really have been. So, and there you have it. That's what we got. As far as vol goes, I expect it to most likely go lower.
Yeah, doesn't seem like there's much on the horizon. That said, Uncle Mike, what caught your eye in this maelstrom of a week so far for the market?
Well, with all of our listeners, I'm willing to bet that there's at least one listener that we have that went long S&Ps when it was down 107 points on election night. Would you guys agree with that? Just by playing the odds.
Yeah.
Oh, say that one more time. That it would be down.
That with all of our listeners, that we have at least one listener out there that bought one S&P contract when it was down 107 points on election night.
How could
you guys
they
agree with that?
How could they? Carl Icahn bought them all. At least he claims.
Oh yeah, I remember. I heard that. I remember him saying
he claims he bought $1 billion. But yes, I would side with you that one of our savvy listeners bought one futures contract somewhere along that massive sell-off. I would hope.
If you have, for our listeners out there, email Mark Longo your success story, because I'd be curious to hear where anybody bought out there at night.
People are always sending me their screen grabs from their accounts. So I'm sure we'll get a few of those.
I'm curious to see any success stories. So, this is really a fun week in that with everything that's been happening. A couple things that I've noticed on election night. The thing that I think really calmed down investors was Trump's speech afterwards, in that I remember just going into that right after they declared him the winner and they broke the news that Hillary had called him to concede. I remember thinking, okay, this could be a big moment. If he comes out and gloats and says, I told you so, and my first order of business is going to be to put Hillary in prison or something like that, I thought, well, we're going to be down 200 points the next time the market's open on the S&P. But he didn't. And to his credit and to Hillary's credit the next day and to Obama's credit the following day, they both made very unifying speeches. And I think that's one thing that, it pains me to give politicians credit in any possible way, but I do have to give both sides credit for the way that they handled the post-election, because I do think that kind of calmed the market and stopped it from going into a crazy oblivion. Now, in terms of what's been happening this week, I think it's a bunch of noise. Now, by noise, I mean, does that mean I'm fading everything? Not yet, but I think that this is very quick and this is very reactionary. Whenever we have a snappy move like we have, in that we're down 100 points in the S&P overnight, and then we just all of a sudden get close to the all-time highs like we are in the S&P. We are at all-time highs in the Dow. It's one of those ones to where I don't think this is going to continue on the pace that it is. Now, could we be in for a bull market the last couple months? I hope we are, personally. And I think it would be, you guys know me, I'm the ultimate perma bull, but don't be fooled by this initial move, and the reason I say that is because the reason that we went down as quickly as we did was based on the election results. And the reason that we came back is because the politicians were all playing nice, I think, for the short term. Now, overall, these policies with the financials doing better because of Trump coming into office, with what can happen with interest rates, with the things that are happening with, as Andrew was saying, with companies that did not fare well under Obama that are looking to fare better, they might over the long term. But just because of the fact that we've had this move the last couple of days, don't get too excited. I'm saying don't get too excited about it yet, because I believe the reason we've had such an explosive move these last couple of days, not by explosive, I mean positive, like we came out from where we were on election night. I think it's a lot has to do with both the Democrats and the Republicans playing nice with one another. With Trump and Obama were on TV today. They're both laughing and joking with one another. Obama's saying how he's going to carry on George Bush's tradition, and that George Bush was very hospitable to him in the transition, and he's going to do the same to Donald Trump. And I hope that's true. But this is like the dog and the mailman being nice to one another. It ain't going to last. So with that being said, I think there is going to be more uncertainty, more chaos, and I think that they're going to try and do things to make things not work for one another. And yeah, the Republicans do have Congress and they do have the White House at this point, but there's still going to be problems in our country. And I'm just saying, don't buy into the hype yet. Now, if this continues to last and we continue to go up at a steady pace, hey, I will jump on the bull train, but I do want to see us break new all-time highs in the S&P 500. I'm not going to say my saying today, Andrew, because it's not based on the S&P, so it has to be on the S&P. That's my rule. Traders have rules. I have to follow my rules, but you are correct if you are holding Dow stocks. So I'm very excited, but I'm very cautiously optimistic in that I don't want to get too overbought just yet. The other thing that I'm watching specifically because of the election results, and I've been kind of playing with this, and I mentioned a little bit on the show a couple weeks ago, is IBB. I think that's one where if we do have a non-Hillary in the office, which we do, that could be pretty bullish. And the thing that I'm going to start doing in the weeks to come, I'm kind of tinkering with it right now, but this might be another longer-term Apple-style play for me that I give updates on the show from time to time on the strategy block. So that's going to be, it's not a core holding by any means. It's a microscopic holding at this point. But for purpose of this show, I think there are a lot of unique dynamic collaring opportunities that exist in IBB, which that is one that I am beginning to become more bullish on.
Yeah, I'm checking it out right now. It was a good day to be bullish on that. Like a lot of I mentioned the pharma and the biotech names. This one in rally ho mode today, up about nearly 2%, nearly 5 handles, closing $289.79. IBB, you're not familiar with it. That's the NASDAQ Biotech Index out there. So a lot of these names, the S&P Pharma Index, the Biotech Index, all of them seemingly liberated from under the yoke of Hillary's populist anti-drug prices, anti-big pharma type solution. It seems like pharma swapped in there for Wall Street as the most popular kicking boy getting towards the end of the election. So at least in the near term, these names smiling. And if you are sick to death of election talk, don't worry, we got you. Let's kick things off with some tangible things we can sink our teeth into. Some names still popping off. I know it's kind of weird to talk earnings right now because there's so many crazy macro things happening. But that said, there are still some earnings, some tangible things to sink our teeth into. Let's start off with some of the big names coming off after the bell today. Disney closing at $95, right around there, selling off pretty aggressively. When we were pricing up straddles earlier in the day, they were trading around 96. So this thing took it on the chin towards the end of the day, only finishing up about a third of a point, maybe some of that prefacing what was to come in the after hours here. That straddle went out right around 270, so right around 3%. That's what they were predicting there. And so far in the after hours, taking it on the chin, off about 350 right now, so nearly about 3.7% or so, hovering right around 92 in the after hours. It looks like they dipped as low as about 90 there. So we'll see how this plays out going forward. Actually just broke through the 92 handle now to the downside, about 91. 90 or so. So yeah, interesting. We'll keep an eye on Disney. Maybe not feeling the love for all those big movies everyone's always watching, as well as the park stuff. NVIDIA about closing right around. They were trading around 68 intraday. Ticker symbol NVDA. If you're not familiar with them, they're the big graphics cards makers. A lot for gaming and consoles and computers, but also a lot of use cases in the options world with them making a lot of the GPU centric devices and platforms that options traders like to use to display so many different names and series like the Googles and the Apples and Microsofts that have to update with every tick of the stock. It takes a lot of GPU horsepower to drive that across a bunch of displays. They closed $67.77. They're pricing in about a $5.40 straddle, nearly about 8% on that straddle. And at least so far, it looks like that name is up a little bit in the after hours. Actually, up a lot now. It started off about 50 cents, and after I hit the refresh button, lo and behold, off to the races in NVIDIA land, moving up about nearly $8 right now, or nearly 12%, hovering around 75.5 right now. So big upside move, dramatically outperforming. I guess things are good in the graphic card world. And then rounding us out, going down to the retailers there, the clothing retailers. This is Nordstrom's, ticker symbol JWN. Closing today right over. They're trading around 57 for most of the day. They closed, I believe, at 56.03 actually. So they sold off a little bit towards the end of the day too. But in the after hours, they were rally homo. They priced in sub $5 straddle, about 485. That works out to about 8.5%. And in the after hours so far, they're moving about 375, trading right around $61, so up about 8.5%, which is again getting close to. We're actually they're up about 7% right now, 374. Actually, no, this screen is jumping all over the place. Our after hours quotes last week have been crazy here. It looks like it's up to about 61, which would be about 8.7%. So right up there in line with that straddle. We'll see how these names play out. Really quickly, Uncle Mike or Rock Lobster, anything to say on these names? Anything catching your eye today before we move on into the odd block?
The only thing I'd say is NVIDIA is kind of a semi favorite in our room, so I'm glad that it's doing well, and they're branching out past just video cards, because they make the fastest chips around. So they've done a good job of branching out as far as where they put all those chips into all different places. So definitely, it's quite a growth story for NVIDIA, considering what they were so PC reliant. Now all of a sudden they are branching out much far beyond all that.
Yeah, there's a lot of room for them to play now with consoles and even getting some mobile devices and things like that too. So a lot of areas you can look at, and that graphics horsepower is important, including indeed in the trading landscape. As we keep on rolling now into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the funky portion of the show, the dark and dubious side, if you will, the portion where we don our fedoras and explore the dangerous side of the options market. Going to kick things off in a ticker we haven't talked about in quite some time. This one you remember, it's a mouthful. It's YRC Worldwide, ticker symbol YRCW. If you're not familiar with this one, they are a holding company that has a bunch of Chinese joint ventures, a lot of them on the transportation side. Closing today, $10.67, up about half a buck or about 6% on the day. This is the name that does about 900 contracts a day. Today, lighting it up to the tune of about 11,000 change, so over 10x. And we're seeing about 110 to 1 calls over puts out there. That should give you some inkling of what caught our eye. Yeah, of that 11,000 and change, about 10,100 or close to it coming in this one upside. Looks like a vertical roll. We've got not out and up this time, just up. No out. It was what caught our eye was the DEES 1213 call spread going up for 15 cents, going up in several blocks on the Amex. Now, this in and of itself is kind of interesting. There is size open interest. Went up about 5,000 times, and there is 5,000 open on the 12 strike there. But there also is about 5,000 open on the 10 strike below it, which kind of led us to assume that it's a roll, but not a roll of the whole spread. Maybe a roll, perhaps, of the short leg of that vertical in order to give, perhaps, our friend here, trying to buy himself a little bit more wiggle room on the upside, a $1 worth of wiggle room, and willing to spend about 45 or collect about, maybe in this case 15 cents, hard for me to say today, to do it. Again, looks like closing the D12 short leg opening on the 13s. Looking here at a chart of good old YRCW, hasn't been good times of late. Their last earnings was late October, and they got cut in half. They were not cut in half, but pretty close to it. They were trading about 14, and they got clipped down to about the 9 handle relatively quickly. So they've been trying, and they dripped late after that in the sessions after down to into the 7 handle range, so close to being cut in half. And have since been on a bit of a rally-ho mode, getting back up to the 1067 where it closed today. I know, Mr. Rock Lobster, this is an interesting one for, of course, not rolling out in time, but just up on the strike chain, and also a bit of a funky one with the other leg perhaps open on the 10s. What did you make of this? Do you think it is related to the open interest on the 10s, in which case this is closing the other side of the vertical, or what did you actually make of this other leg of this trade?
I think it kind of smells like a love your broker trade.
You don't often see people doing 15 cents to get a buck.
They're paying 15 cents to roll. I mean, okay. I guess it works, but doesn't it look like that could be, again, we don't know for sure, but or they covered the short call. Let's say if they had it against stock possibly. So you cover your short call, you roll up for $1 and you pay 15 cents for that, and you're still what, $1.50 away or something? Why even bother with a short call in the first place? I mean, at that point, just take your short call off and wait. I'm not quite sure what the heck they were waiting for or rolling for. It's all perplexing. Although the only thing I could say is, maybe if NAFTA gets changed, yellow freight will start, that could be very bullish for them, and they want more upside, which is certainly possible. But, at that point, why bother selling anything for a dime? That would be my next question. I don't.
Is that not what you guys teach in your weekly weekend webinars?
Well, when you have sort of this parabolic upside, I don't know if it's worth. Yes, we basically say don't sell anything for less than 15 cents. Just take that thought, put it right out of your mind. Just make it go away. Take it out of your mind. Just make it stop. So anyway, that's what I think on that. It just looked like an odd block special to me. That's all.
It certainly has the air of it. Speaking of making a stop, my computer seemed like it's telling me to make a stop here. So we'll keep on rolling into our next name here, as this is HBAN, ticker symbol HBAN. If you're not familiar, this one is short for Huntington Bankshares Incorporated. Again, this is a regional bank holding company, closing today $11.60, up about 70 cents or so a little over 6% on the day. It's the name that does about 2,600 contracts a day, lighten it up quite a bit today to the tune of 18,000 and some change, 16-1 calls over puts, and it appears that we've got a bull here, a fan of good old HBAN, to the tune of not in Nov, not in Dece, out in Jan. The Jan 2017 11s were where the action was today. In particular, paper just gobbling up those 11s, starting with a block of about 6,800 for 70 cents. That went up on one block over there on the SIBO. It had a price variation tag, but we didn't see any of the associated perhaps stock with that leg. More went up as the day went on, about 2x, to the tune of a little over 13,000 on the day here of this gobbling here of these Jan 11s. Open interest is about 6,800. Which is kind of interesting because it is very much in line with the size of that first block. But it seems like this is indeed opening. There is, of course, getting back to our earlier discussion, there also is about 11,000 contracts open on the 10 strike out here in Jan. So perhaps there is something afoot out there. Vol up, as you might expect from all this call buying pressure. Looking at what's been up in HBAN over the past year, and it has been an interesting, again, kind of following the market quite a bit, taking its trough down in the Jan-Feb timeframe, rallying back, selling off a little bit again in the middle of the summer, and then rallying back from midsummer up until about now, hitting a high recently at earnings of around, about 1086 or so. Actually, no, a little higher than that. And then before selling off here again today, and again, that's obviously got to be higher because it's 1160 today. Again, these quotes are just all sorts of funky today. Let's see if we can get that fixed up as we toss it to the Rock Lobster. Mr. Rock Lobster, it seems like it's just as it appears to be on the surface, size upside love here for the for HBAN, and loving it on the 11 strike, but there is some open interest to speak of as well. So what are your thoughts there on the OI versus the paper we saw today?
It seemed like banking frenzy. There is so much volume in banks, bank stocks, bank this, bank that. I have to say it was a little freaky. The volume in all these names the last 2 days have been huge, and it's been massively bullish. There's like 5 zillion calls and 1 put. So all I can say is somebody want it bad. That's what it looks like. Bye.
That is indeed the case, sir. As we keep on rolling into one of our oldies but goodies, one of our old friends, a frequent offender here on the old odd block. This is XLF. Excuse me. This is indeed the Financial Select Spider, closing today 2161, up about 3/4 of a point, or nearly 4% on the day. This is a name, as you might expect, anything with the Spider tag attached to it. Does some decent paper. It does about 113,000 contracts a day lately, doing about 6x that, 655,000 contracts today. So pretty active day, I think. However you cut it, this kind of gets back to what the Rock Lobster was alluding to earlier with the banking and the banks rallying. Even with the upside and everything else, there's only about a little over 2-to-1 calls over puts out here. So it wasn't a complete call palooza, which is interesting in and of itself. And what caught our eye was appears to be a Tosaw special, not just in the product. I know he likes a little bit XLF every now and then, but also in the trading strategy. And it wasn't Nov, it wasn't Dece, it wasn't even Jan this time, listeners, all the way out to Feb. And someone's betting on, looks like, some rocking and rolling here to the upside in XLF. And they weren't really discriminate on their strike, or maybe they couldn't come down on a strike. So they said, we're going to get a couple of them, to the tune of paper buying the 28,000 of the Feb 2017 22 calls, and then following up. That's not enough. I need a little bit more. I'm going to buy about 20,000 of the Feb 24 calls, doing those for 45 cents and 6 cents combined. Went up in big blocks over there on the SIBO, and the Philly looks like some of it actually went up through the offer to facilitate it and get things done. I went up price variation, did not see any stock going up with this, so it appears to be what it was. It was it was not mark spread, which is another indicator that it is indeed old school, funkalicious, stupid. This is interesting. I haven't seen some size stupids going up in a while out here, so this is kind of interesting. Going back here, looking over the past year or so out here in XLF, and this thing has been all over the place, as the banking sector has kind of been all over the place as well. Taking a nice drubbing back in September, and then in lieu of or in accompanying with their dividend there in September, and getting down to from about the mid 20 or so handles down to about 19. Kind of been vacillating in that range ever since, until, of course, our friend Mr. Trump took office, and now we're seeing banking sector on the resurgence, closing today 2161. Mr. Rock Lobster, let's take it home here. What's your thoughts on this size upside Feb stupid in XLF? It's just fun to say.
It's when I'm writing these things up, I think to myself, how is Longo actually going to try to pronounce that? Is he going to be able to stuff all that in his, will that all come out of his mouth in a mellifluous way, on the radio program. But I have to say, like I said, nobody over the last 5 years has bought upside calls in XLF. I mean, the thing's got like 8 volatility. It moves. I think it's great to own. It pays a dividend, blah, 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 blah. But buying calls that are $3 out of the money in that thing, it seems like a one-way trip to Palookaville. So the fact that there are call buyers, maybe even if they're covering some sort of short position, but you just don't see a lot of 6-cent call buyers in in XLF. So I thought it was quite, like the church lady would say, it was special. It's a special purchase, and it was even specialer because they bought even more calls 2 strikes below it. So it's a whole lot of call buying out there. And that's even after we've had a 15% rally in bank stocks since Monday. There's no stopping it. I think it's smart to go farther out in time if that's what you want to do. There you go.
Yeah, it's a funky one. Speaking of funky, going back to our earlier name, YRCW, Trader Anki, a regular listener and writer in, asking about all things open interest. He's definitely a devout watcher of all things open interest. We were talking, of course, just a few minutes ago about the YRCW, kind of bit of a small dollar roll we saw out there. And he's noting that he saw yesterday at least the 8, 10, 11, and 12 calls traded 5,000 times. I don't see unless the 8s were closing. So 8s and 11s are pretty much unched here. There's no open interest there today. 11 and 12. So that's kind of interesting. Maybe I'll have to get a chance to dig into that. Maybe we'll do that, Mr. Rock Lobster, while we head on into the strategy block and Uncle Mike does some strategizing.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, it is indeed Thursday. It's a post-election Thursday, and a lot of stuff lighting it up. Markets rallying, Dow hitting new highs, a lot of things to happen. And in these environments, maybe you're a covered call writer. I know a lot of our listeners out there are. And I know a lot of my minions today, they were worried about their covered calls getting called away. So I've got a feeling, Uncle Mike, if it's hitting our minions, then it's probably a good time to revisit it with our listeners as well. What say you, sir? What do you have on the docket for today?
It's funny that you may ask, because I had a long conversation with your minions today, but then they just got too excited and freaked out, and then I couldn't continue it. So
that was you sneaking through the studio earlier today. I thought I saw a recognizable silhouette in the distance.
No, it wasn't me. It was my twin. I never leave the city of St. Charles unless we have a live show. But anyway, I figured since the minions wouldn't let me finish and they just got too concerned and nervous, I figured that I would just do the strategy block today, so that way they can listen to it on the on the Options Insider app on their Androids that they have. So how's that for a good shameless plug? But anyway, what I want to go through is if you get called away on your covered call, there's a lot of philosophies that we've talked about. You can do the touch and go, meaning as soon as the stock touches your covered call, you can roll it up. You can do what we've talked about, the Uncle Mike's double chicken wing philosophy. And what that means is that if you're a amateur wrestler, the best way to get out of a double chicken wing is to not get into it in the first place. And with a covered call, the best way to avoid getting called away if the stock were to go to high heaven is that you just sell a call spread and not a call against the stock. That's another way with which you can do it. But what I want to go through today is just the mentality that you have when you're neutral bullish, or somewhere between neutral and bullish, and so you sell an out of the money covered call on a stock that you own, and you actually get called away on it. And let's say it goes in the money, and you decide, I'm just going to let it get called away, but I'm still a little bit bullish on it. But man, I really don't want to roll this thing. Well, here's what I would do in that situation. And right now, as I was saying earlier in the show, I am the perma bull, but I'm not going to really jump on the bull train too much until we make new all-time highs in the S&P. And so if you have the mentality that I have, and that you're like, yes, I'm happy that we've had the upside these last couple days, but I don't know if this is going to last, and I want to get a little bit more assurance. If that's your mentality on the stock or on the market as a whole, then what I would look to do is let yourself get called away. Let's say that you have options expiring this week or next week. Let it get called away for the time being. And by doing that, yes, you do lose out on some of the upside of the stock, but the problem is right now with vol lower as it is, rolling up is difficult to do because we don't have as much volatility in the marketplace. And you likely sold that covered call when we had higher volatility. So by letting yourself get called away, well, what do? Well, at that stage, then you got to play it like it's a pullback. And what I mean by that is this: wait for some type of a pullback. And when it gets low enough, number one, you can either buy the stock back if it pulls back enough to where you're below your strike price or even close enough to your strike price. Oftentimes people say, well, I don't want to buy back in if it's above where I got out of it at. That's horrible. Well, nothing's perfect in life, folks. You sometimes have to do that if you're still bullish on it. And if you're that bullish on it and it goes up and you make $1 million off of it, if you tell people that story at a party, no one's going to say, oh, you loser, you had to buy in after you got out of it at a lower price. So if that's a concern, don't try to be a perfectionist trader. But what I'm saying is that you can wait for the pullback to get back into the stock. But if you don't get quite the pullback you need to get back into the stock, sell a put. Sell a put to get back into it. If you got called out at 55, stock goes up to 62, and it's back down at maybe the 58 level, then you might have enough juice to sell a 55 put to get back into it. Now, by doing that, let's say the stock goes down, you can mentally say, okay, I got the stock put to me right where I got out of it to begin with. But you had the premium, and then you can continue the wheel trade all over again. So at this stage, based on today's market, if you have a similar sentiment as I have that I just mentioned, then I would be cautious, or I'd be more hesitant to roll calls up at this point if you're in the money, and just wait for a little bit of a pullback at this point. And if you do get called away, then look to get back in with either a pullback on the stock, on buying the stock itself, and you don't get that much of a pullback, then sell some puts. And that is the strategy block for today. And hopefully the minions are calmer.
Yeah, they need to settle down. It's been a crazy week for everyone, minions included. Hard to get them. I've been reducing their jams and jellies, and that seems to be doing the trick. But I'm with you. I've said it many times on the show. Getting called away is not the worst thing. It means you win. Yay! But some people can't wrap their heads around that. It's a challenge. Speaking of challenges, we're going to dig really quickly. We got a couple extra minutes here, but we'll dig really quickly. And some of your listener questions here in a quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion where you guys take the reins. We mentioned a question. If you guys have hit us up, of course, via Mixler, via the website, etc., and so on and so forth, I want to dive right on into the questions. You know how to hit us up. Like Trader Anki did during the show here with this paper on, he mentioned that YRCW also trading yesterday the 8, 10, 11, and 12 calls in December, 5,000 times a piece. Rock Lobster and I did some digging into that while Uncle Mike was illuminating us on all things covered calls. And if anything, after digging into this, we're even more, or should we say less illuminated on this trade. To put some of today's activity, though, into perspective, it seems like, Mr. Rock Lobster, from what I was able to dig up, and maybe you found something similar, it looks like our friend over there yesterday, he traded the 8s, the 11s, the 10s. I just had it right here in front of me. Where did it go? He traded 4 strikes over there yesterday. Here we go. He closed on the 8-10 vertical 5,000 times, selling out the 8s, buying back the 10s, so closing out a long spread there. Makes some sense. The stock has moved. But then he goes into the 11-12 vertical, buying that one, and then apparently today, 5,000 times, today decides, yeah, you know what? Let's keep that leg on that he has on the, I guess he must have had extra on the 10s, because there still is 5,000 open on the 10s here as well. And let's also do the 12-13 today. So I don't know. This guy, he might get the reward for the most indecisive trader we profiled for a while. Either that, this guy really, he must have a very attractive broker, and maybe he wants to get to know them a little better, shall we say.
I that's the only thing I can think of, because I'm still trying to figure out, looking at the pricing. I can see how he made money rolling 11s to the 12s possibly, and then he did the 12s to the 13s. But he's still, or he or she, still short the 8s. So maybe against some stock, because then they close the 8s, and I don't know. So they're just trying to scrape the stock's up at $3, and they've scraped, I don't know, like a little tiny bit of premium out of it. So it's crazy is all I can say. I don't get it.
Yeah, speaking of not getting, we had, of course, our question of the week. I believe it was last week. We asked you which of those 4 things would happen. And lo and behold, crazy, a little over a week later, all 4 of them actually did happen. Facebook beat his straddle. VIX popped over 20. Cubs won the World Series. And Donald Trump is president. The latter 2 of those being the more extreme outliers of the bunch. Who'd have thunk? We could say all that in one sentence, Mr. Rocklop's Uncle Mike, that we could say in 1 week, or a span of about a week, a little more, all 4 of those things came to pass.
What a week.
What a
you know what all that goes to show too is that's why there's risk control, because ultimately things you think that can never happen. That's one of the option pit lessons is risk control is for all the things that you don't think can happen. So if you think the stock's going up, woohoo, you're going to win. Okay, you're set up for that. But what happens if it tanks in your face and you lose all your money? So you have to think of, if you want to trade any kind of options, risk control is for the things you don't think will happen. I have a lot of students in my class when we set up trades. They're like, "Why are you doing that?" I go, "Because you don't know what's going to happen." And the next day the stock's down $20, and they're like, "Wow, we're really glad we did it that way." So because you just don't know.
Speaking of not knowing, we gave you this week's question of the week, which was, hey, what's gonna happen at the time when we put this up on Monday, right around the middle to end of the session. We said the straddle was pricing in about a 2% move through the election out there in the SPX. How much will it move through Wednesday? So yesterday's session, we gave you the less than 1%, so the meh. The 1 to 2%, which is we termed a mild move, 2 to 3%, which was a big move, and of course the crazy move, which is over 3%. I guess you can look at this a couple of interesting ways, which is the case with a lot of straight net movement. We were right around on Monday when we closed, we were right around 21.31 actually, and today 21.67. So a decent move, but perhaps not quite the massive move. But of course, as we all know, intraday and overnight, there was a lot of vacillating on out there. So people over 3% winning our poll with about 36% of the vote, 22% for 2 to 3%, 31% mild, 1 to 2%, and 11% going for the meh. I don't know. What should we award the victor here? Because it's kind of like, is it range? It's kind of like Gamma. If you were scalping Gamma that whole time, you did all right. But maybe net movement-wise, it wasn't the blockbuster overall.
I think that if somebody was savvy enough to say we were going to get that big of movement, and if they were trading overnight in the futures arena, I think they were savvy enough to take some type of profit when we had the 100-point move in S&P.
That goes back to your point from earlier that you think someone in our audience, the savvy folks in our audience, did well, which hopefully that is indeed the case. We got some other good questions. We got a comment here from, this is an interesting handle, Bong Song 2. I wonder what he likes. And he says, Trump win makes America great again. Well, there you go. You got a Trump fan in the audience. Certainly making the markets great if you're leaning that way. Let's keep on rolling into our final segment, though. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. This is the portion of the show where we tell you what we're keeping an eye on for here going into the weekend, end of the week. A quick check back on all those straddles we were talking about earlier, the earnings. Disney was pricing at about 3% or $2.70 move. Right now, it's off about 3.5%, so a little bit outperforming to the downside, even though some of that has been ameliorated since the last time we chatted, and actually it popped up again. Again, these quotes are so delayed, it's annoying. About $2.50 now, so $2.62 here on good old 2.62%, I should say, on Disney. Looking at good old NVIDIA, this thing continues to rock. It was moving, or was pricing, I should say, about a $5.50 straddle, about 8% right now, up $9 or 13% in the after hours. So again, things looking good in the graphics frontier. And last but not least, Nordstrom, JWN is a ticker out there if you're not familiar with that one. They were pricing in about a $4.85 move. So far in the after hours, they're up about $3.65, so about 6.5%. So still underperforming. We'll see if that one moves into the outperformance as tomorrow comes to pass. Speaking of tomorrow, Uncle Mike, we'll start with you. What are you watching for the rest of this week into the weekend?
Well, I think right now the thing that I want to see is who is going to be talked about for Trump's cabinet. I know Jamie Dimon was actually one that I heard today was on the short list for the Secretary of the Treasury. So I'm curious to see if he brings in a lot more business people, and I think that's going to shape policy, and I think that's going to ultimately have an effect on markets. But once again, I want to reiterate, I think this week was kind of noisy, and be cautious and hold off a little bit until I can say my favorite saying to say about the S&P.
Yes, everyone waiting with bated breath. As we wait for Uncle Mike to drop his famous line, Mr. Rock Lobster, what are you watching for the rest of this week into the weekend?
Just, how this kind of, I guess this sort of really, if this funky sector rotation really plays out some more, I think it'll be a good opportunity. I would add to some more longs for the Qs. Right now, VIX is kind of muted around 14 3/4. We have had some tremendous moves the last couple. Today, though, Qs down. I guess the VIX for the Qs or the VIX for the Nasdaq never took off, but today would have been a funky day for it with almost a 3% move at one point intraday. So, if this sector rotation, they keep stretching the rubber band, that's when I like to get interested in being a buyer. So maybe we have another day of it and that'll be good. But, you have earnings like NVIDIA just put out. Maybe some of the tech buyers start showing up tomorrow.
Yeah, we'll see. You got to wager that this immigration issue, it certainly will have an impact on them, whether it's this substantial or not. If they just can't get any good talent, I don't know. I guess we'll wait and see. But right now, at least the outlook not that bullish for the tech, but who knows? It didn't seem that way going into the futures overnight in the election, and look how that turned out. Speaking of turning out, we're going to turn out pretty much the rest of the show right now because that's it. We're done. Even our music not playing along today. There we go. Third time's the charm. Can't go out without that rockin' tune. That's going to do it for us here on the old Option Block program today. But before we go, one last time, we check back in with my cohorts here, my partners in crime, see what they have cooking up that may interest you, starting in the realm of the Dutchie this time. Mr. Rock Lobster, what's cooking in all things Maine and indeed the Option Pit?
Option Pit, we're looking for our next Saturday event. Our last one on Evolve products was pretty fantastic, and we got a lot of great feedback. Actually, we got a lot more clients from it, as we always do from our Saturday courses. And I'm toying with the idea of a 10-week volatility course for mid-January. So for all of you that really want to learn how to trade the vol products, trade VIX, use volatility in your own trading, we will be giving you the course for that. So send me a note at andrew@optionpit.com if you are even remotely interested, and I might just give you a discount.
How generous of you, sir. Hit him up, andrew@optionpit.com. to learn more. And Uncle Mike, what is cooking in the land of all things going long at RCM Alts?
Well, in all things alts, there are a lot of alternatives and a lot of questions about what to do following the election. I will say this, over the course of the last couple days, I've probably gotten more phone calls from clients than I have in a couple months. So with that being said, that tells me that there are a lot of questions going on as to how we should play different things and do different things. Should you have questions on what to do with your investments post-election, call me. I am more than happy to discuss. 312-212-3531, or send me an email at mtosaw@rcmfs.com.
You heard the man, listeners. Hit him up for all things Uncle Mike. Let him roll your puts or indeed your calls for you. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for joining us live, for those of you who can make it every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. We'll see you Monday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.